The media is ablaze with doom and gloom headlines. Is the real estate market as bad as everybody's saying it is? What's going on with purpose-built rentals, the oversupply of condos? What is happening in the resale market? We will find all of that and more on this month's edition of the Vantage Report. Ladies and gentlemen, thank you so much for joining us. I make these videos to be your eyes and ears on the local real estate market so you can make informed decisions on your real estate. So first, we're going to go through some of the headlines that are happening. The good news is we got our first Bank of Canada rate cut. So the overnight lending rate is now 2.5%, and we should start to see the 5-year fixed rate money start to come down, making homes a little bit more affordable for the average person. And your refinance rate, if you're refinancing this year, is going to be more approachable. So that's great news. The next big headline that we're probably hearing a lot is about this oversupply. There's lots of condos that were pre-sold now taking delivery, which are hitting the market both in the rental market and on the resale market. And you've got a number of purpose-built rental buildings that were built using government-backed financing programs that are all hitting the market at the same time. And what this is doing is creating a ton of choice. It is a renter's market at the moment. We're seeing downward pressure on rentals. And as a consequence, the vacancy rate in Kelowna is as high as it's been in 30 years. We're definitely approaching 5%. And if you really consider all of the unrented units, the true vacancy rate is much higher than that. Now, with this higher vacancy rate, if it sustains for over 2 years, which all signs point to it certainly will, then it looks like they're going to relax the short-term rental restrictions that they imposed a couple of years ago. Now, this is great news if you currently own a unit in Playa del Sol or Discovery Bay or any of these other buildings that were initially zoned for this usage. Certainly the city of Kelowna and the tourism industry could use affordable short-term rental inventory. So this could be something that we could look forward to next year in terms of some relaxing of some of the restrictions that made investing in the Okanagan difficult. What that means is renters can look forward to incentives, 2 months rent holiday in many cases, as well as things like free parking, free internet. So all kinds of incentives. Now, on the topic of real estate investing, many of you may have heard about the potential rule change coming regarding financing investment properties. OSFI is suggesting that if you have already used your personal income to qualify for one mortgage, it is now used up and can't be used again for subsequent mortgages. Now, this has not come into effect yet, but it has got a lot of people, especially in the media and in social media, talking about this and how it could be very prohibitive and very punitive to Canadians who are looking to use real estate to get ahead. So we'll watch and monitor that as we go forward, but nothing to panic about yet. It has not come into effect. So if you are thinking of getting your hands on some investment grade real estate, I would act now before potentially these changes change your financial capacity to do so. The smart folks that I'm networking with and the data that I am diving into suggests this will take anywhere from 12 to 18 months for it to work its way through the system. And if you look at what CMHC is predicting, is that by 2027 to 2030, you will have a shortage of supply that does not meet the demand again. So we're currently going through a turnover period in our rental market. It was needed. It's given some softening in the rental and given the balance of power to the tenants for the first time in decades. But the rental market is not the resale market. And I want to caution you that the things you're hearing on the news are most typically centered around Vancouver and Toronto. And those markets are very different than tertiary markets like Kelowna, Vernon, Penticton, and the likes. And so when you're seeing these doom and gloom, understand this pertains to these major centers where there are some very major systemic issues that have to be worked through. We do not quite have that much blood in the street here in the Okanagan. So what is happening in the resale market? Well, number one, sales are actually up 14% year over year, although in Q3, things did fall by about 8%, but this can be chalked up to seasonality. And when I say things fell by 8%, I mean the total sales volume. We're seeing the discounts have shrunk. The average discount last quarter was 3.2% and is now compressed to 2.8%, which means that sellers are holding a little bit tighter to their bottom line. The days on market, however, have increased from 42 days to just north of 50, so it's taking a little bit longer for homes to sell, but the discounting is shrinking. The number one stat that we look for is the absorption rate. This gives us the overall health of the market. Now, this time last year and last quarter, we were sitting right at 10 months worth of inventory. 10 months is definitely a buyer's market. Now, we've seen that inch downward now to 9 months worth of inventory. That's taking the total number of active listings and dividing that by the number of monthly sales. And so what we are seeing is the market and pendulum starting to swing back towards the seller. It's by no means a seller's market, but that's why we're seeing the discounts shrinking, is because that pendulum is starting to swing, which means we're in the early stages of a recovery. If we understand how a market moves, it goes from slump to recovery to boom again, and then it returns back into a slump, recovers, and booms once again. And so when we track all of the market drivers, the market influencers, we are seeing that everything lines up to the early stages of a market recovery, which is wonderful news and the most intelligent entry point into the market for buyers and for investors, because you have the rest of the recovery and the entirety of the next boom to look forward to before we go back into a contraction period. So great news in terms of the market. What does this mean to you if you're thinking about buying? I've been saying this now for over a year. The best deals are already in the rearview mirror, but this is the best deal you're going to get for the foreseeable future. Waiting is no longer paying if you're thinking about buying. For somebody thinking of selling, right now is actually a perfect time. October is truly one of the best months of the year to sell in, because people are trying to beat the rush before the snow falls. And so we're finding that our listings right now are getting some additional attention over and above what happens in September when everyone's in that frenetic back to school period. So October is a phenomenal month to get a home sold, but as we approach Christmas, it likely makes more sense to wait until the early new year to put your home on the market. Either way, this is the best time in the last 2 to 3 years we've seen for sellers, and we expect it to get incrementally better as the months go on. So there you guys have it, folks. If you're interested to know what your house might sell for in today's market, we've got a handy tool right here, a brand new tool we have called Owner's Console that will digitally tell you exactly what your home might sell for in today's market. You can start that process right here below. And if you're interested in poking around to see what properties are available in the over 3,500 listings that we have on the market, you can start that process right here below as well. Once again, thanks so much for watching, and we'll see you in a couple months.